Hey everyone, so Opendoor Technology did pretty good last week, even though the last 2 days weren't that great, but the whole stock market wasn't that great. So it affected Opendoor slightly. We're still up a lot because we did go down to $5.24 and then went all the way back up to I think 9.46, and now we're down around the $8 area. So we're still up a lot, but the market has been going down some, and that's the issue. So let's look at the charts and the news and see what's going to happen next with Opendoor. So here we are, 4 days straight green candles for Opendoor. We're looking really great. As I always say, you go up fast, you're going to come down a little bit. As long as you don't go up fast and come down fast, it's still decent. Went up a lot, 4 days straight, and now we're coming down a little bit in the past 2 days. And I'm going to come back to the chart in a little bit, but Opendoor Technology has climbed 23% week on week despite suffering losses in the past 2 days, primarily driven by a 1 million insider buying ahead of the dividend distribution. And we know who that is, the CEO. $1 million worth of shares last week. Then on here it says, however, the stock fell on Thursday and Friday as investors resorted to profit taking while digesting the potential dilution impact of the warrant dividends on existing shareholdings. So as you know, Open is offering some shares, which is going to cause some dilution. It's to raise money for Opendoor in the future, and it's going to help Opendoor, the company, do much better as far as debt. But the shareholders will feel the impact because of that. A lot of companies do it. Very natural to raise money, so they want to incur more debt. And more news on the warrants. Each investor holding 30 common shares of Opendoor is set to receive one each of Series K, A, and Z warrants, exercisable at prices $9, $13, and $17. And it'll be listed on the stock exchange under the symbols OpenW, OpenL, and OpenZ. And this article says Opendoor stock is climbing again. Is it a value trap or amazing opportunity? Opendoor is up 430% year to date despite dismal earnings, and investors are excited about its new CEO. It's still cheap, trading at 1.3 times trailing 12-month sales, but a stock is only a bargain if it has significant long-term upside. Otherwise, it's a value trap. And that question is pretty hard to answer because the conditions for Opendoor is not really there yet. We got to get the housing market back in shape again. People start buying houses again, and the interest rate cuts need to be further cut. So it's not really a way to answer that. Is it a value trap or an amazing opportunity? In my opinion, it's an amazing opportunity if the company can deliver on what they want to do. Because Opendoor is very untraditional. It's not like how we buy and sell houses right now. It makes things very convenient, but at a cost. So if people value convenience over some price they may lose off the equity of the house, then Opendoor is going to be huge. The new model of Opendoor 2.0 involves buying many more homes faster and good ones. So the reason why Opendoor hasn't been buying a lot of houses because they were too expensive. They said they're going to wait and see for the prices to drop and get a better value. So that's why they're slowing down buying houses. Not because the company is going down the drain, it's just because they're waiting for a good time to buy more houses. And when people are going to buy houses, there's no point in buying houses right now, right? And if no one is buying the house, it's just going to sit there. That's a waste of money. So that's why they're not buying houses and why they're slowing up the pace. To me, in my opinion, they'll start buying houses probably next year, early next year, because as the interest rate drops, people are going to start to get back into buying houses again. So Opendoor is going to want to have that inventory of houses to meet the demand. There's no point of having supply of so many houses, thousands of houses, and there's no demand. So it's a smart decision on their part to slow down the pace of buying houses. In terms of buying and shipping at home, the CEO is working on a buy now button so a customer can enter a home virtually, tour it, and buy it with the press of a button. One button, you buy it now, the house is yours. Also, you will not need any human interaction. Pretty much going to be all AI. You'll choose your home, your financing, your warranty, your insurance, all in one place, all in one flow. That's what he envisions. Based on this article, it says, that said, there is no way to know if it can really turn the business around, especially as the external headwinds remain strong. So pretty much they're saying, the house market is down the gutter. But in my opinion, as it improves, Opendoor will have an opportunity to show their business to new customers. And if the new customers like the way Opendoor is handling business, they like the way you can just buy now or sell now with a lot of convenience, then Opendoor is going to do really well. And as stated, this isn't a Mag 7 stock like Nvidia, Apple, Meta, Amazon, not like that at all. So if you want to go all in on Opendoor or spend thousands of dollars buying shares, remember this is going to be as like a pretty much a mid-risk stock. I wouldn't say it's a low-risk stock or a high-risk. I kind of put it in the mid-risk. Once the economic situation improves, we can have a better idea of how Opendoor is going to operate. But based on what I'm seeing right now, it seems like Opendoor can work if the consumer is looking for convenience of selling a home. Now here's the technical part I wanted to get into that can help you make a decision about Opendoor. If it's really right for you in investing long term, but if you're investing in short term, looking for a profit, of course, Opendoor could be pretty good for you because there's a lot of volume, right? Day traders, swing traders look for stocks with a lot of volume, and it may be good for you on that part. But if you're looking for a long-term investment, 5-10 years, this is the stuff you want to know right here. So the average customer rating for Opendoor, 4.2 out of 5. That's good. Selling options, cash offer, or traditional listing. It gives you an option on how you want to make a transaction. I like that. Service fee, 5%. Active since 2014. Annual home purchases, 15,000. It was higher than that. It was in the 20,000 plus, but it kind of winded down the home purchases because of economic conditions right now. So that's why it's 15,000. Why Opendoor might work for you. And this is the meat of Opendoor. Why you would choose or not choose Opendoor. You can pick your closing date. Once you sign a contract, you can close in as soon as 14 days or pick any date up to 60 days. Sell as is with no repairs. They'll buy your home as is. Don't worry about fixing anything up. Don't have to worry about that at all. You skip the traditional listing process. Avoid the stress of open houses, coordinating with potential buyers, especially helpful if you work from home or have pets or children. So very convenient, right? Built-in backup plan with offer lock. Alternatively, you can try listing your home for more than with an Opendoor agent while keeping their cash offer locked in as a safety net for up to 30 days. Sounds good. Now, here's the negative part of why you may not choose Opendoor. So, why you may choose it sounds good. If you looking for convenience, you want something pretty fast, convenient, no hassle, no stress. But now, here's the part where it takes some of your money away, right? Now, this could be an issue with some people, especially older people. Younger people, they may not look at it as much because they want to do things quick. But if you want to save money, Opendoor may not be for you. But we don't know. The new generation could change things. They may not worry about this as much. Now, here's the negatives. Opendoor typically offers less than market value. We analyzed more than 400 homes bought and sold by Opendoor and found that the company typically paid sellers $26,000 less than the resale value of their homes, not including fees. Now that's a big one, especially if you want every single penny you can get. Sudden price drops after inspection. Your preliminary offer can plunge once Opendoor flags necessary repairs and make adjustments for the market. Some folks see reductions in the tens of thousands off their initial offer. Extra service fees and repair costs. Opendoor charges a 5% fee, similar to traditional agent commissions minus the representation. Additionally, repair deductions and closing costs can bring total expenses to 7 to 10% or more of your home value. A limited room for negotiation. Opendoor numbers are largely take it or leave it, unless there's a clear valuation mistake. So here we go. If you're in a situation where you need to have a sale that you can get a quick fire on or need to move without having to make those repairs or worry about inspections and appraisals, Opendoor is for you. Opendoor is the right thing for you if that's what you're looking for. And here's the breakdown. Say, for example, you're selling your house. Opendoor offers you $338,000, but the market value of your house is $366,000, and you left $26,000 left on the table by going through Opendoor. But you have that convenience, right? And here's the last thing we'll look at. Service fee, 5%, closing costs, 1%, and repair costs, it varies. So going through all that, it seems like it's based on convenience and how fast you want to sell your house. If you don't mind losing some money off your house because you want to get this transaction done quickly, you want it to be convenient, you don't have time for all the open houses and all that, Opendoor is going to be for you. It's possible, very possible, that the mindset of people, home buyers, could change and believe that the positives outweigh the negatives. And also the new generation coming up could think the same thing as well. So if the mindset of home buyers change in a way that benefits Opendoor, that people want convenience, things done quick, and it seems like that's what's going on. A lot of people want things quick and convenient nowadays, right? So Opendoor will flourish if that happens. So now let's look at the chart. On the weekly, we are in an uptrend. Let's draw a line here like that, and that's the uptrend we are for the weekly. So we are definitely still an uptrend on a weekly for sure. And we wouldn't be in a downtrend unless we start to break maybe the 675 or the 630 area. So we are far from a downtrend. We're still looking good. And here are the resistance support lines. I have not changed those lines at all from last week. I'm going to keep it the way they are. I still have $7.59 support, $7.98 support, resistance $8.49, and other resistance is going to be $9.13. I'll keep it the way it is because we're still trading within those support resistance lines. We're almost at that $7.98 support, but Opendoor is up after hours, right? We're up almost 0.5% after hours, $8.19. We're hovering between those two prices, $8.16 and $8.19. So I keep the way it is. I keep the support resistance exactly how it is. Now resistance is going to be at 850. There's a huge resistance at 850 because we try to break 850 on Friday, and that was a big hurdle. We could not break 850. It's huge. Every time we touched 850, it came right back down. So that was huge. And then on Thursday, we couldn't break 915. A very big hurdle to break 915 on Thursday. We were over 915 on Wednesday, but only for a short period of time. After hours, pre-market, we couldn't break that 915. We went right below it. And all day Thursday, we couldn't break 915. Stayed right under it. After hours, went below it. Pre-market, below it. So now we're in that 799 to 850 area, right? Yeah, right in the middle almost. So that's where we are for the chart. Opendoor, when the stock market opens on Monday, the first thing we want to do, we want to break the 840 area because that's going to be resistance right there, huge resistance. So what to look for is we break 840 and we try to break that 850. So if we trade within 825 to 850, that's going to be a nice trading area, 825 to 850, because that's going to put us in a nice uptrend as far as the hourly and the daily chart. But a weekly, we're still looking good. So if we continue to go up, 825, 850 trading area, we want to trade in. If we go down, we want to trade between 785 to 815. So I broke down Opendoor for you as a company, how they operate, the positives and the negatives for you. It's a very different company, very different from traditional way of buying and selling a house. But home buyers' mentality started to change on how to buy and sell. Then Opendoor is going to be at the top. They're going to be number one. They're going to be like the Carvana of houses for sure. If the mentality changes on how to buy and sell. It happened to cars already. Now, the trick is, can we do that with houses? Now, if we can do that with houses, yeah, Opendoor is going to be $100 stock plus because it will be number one in that business model because they're already putting things in place for that to happen. All right, everybody, thanks for watching. Subscribe, comment, like, keep supporting the channel, and take care.